Welcome to Looking at the Markets with David Modell. I wanted to talk to you today about the stochastic indicator. Yeah, stochastics can be very powerful, but you want to know which one to choose. There are different ones. You have your slow stochastic and your fast stochastic. Which one is right for you? Well, let's talk about that, okay? And stick around because in the middle of this video, I'm going to tell you about this charting platform that I'm using and also a trading platform, which I think you're going to like a lot. So watch this whole video so you can learn about that. But for right now, let's talk about stochastics and different types. So I'm looking at the Bitcoin chart, BTC to USD, Bitcoin to the US dollar, and I'm using the 1 minute candles here, 1 minute candlesticks, okay? But everything I'm saying today could be applied to different time settings, whether it's daily candlesticks or 5 minute, 2 minute, 1 hour, whatever you like, okay? You can apply the stochastics to both of these, and I've got two different stochastic indicators up there right now. On the top, I've got the slow stochastic indicator, and on the bottom, I've got the fast stochastic indicator, okay? And you can see the difference visually. You can see how with the slow stochastic indicator on the top here, it's moving a little more smoothly and, well, a little more slowly. Hence the name stochastic indicator. On the bottom, you've got the fast stochastics, all right? And you can see it's not as smooth, more jagged, okay? Especially that orange line there. That is definitely more jagged than anything you're seeing in these slow stochastics, all right? So you might notice, it might be hard to see, but if you look at the orange line in the slow stochastics, okay, look at it, and now look at the pink line down here in the fast stochastics. Notice that they're the same line, just different colors. You might have to squint really hard at your screen to see it, okay? But yeah, okay, so I'll say it again just so you know what I'm talking about. The orange line here in the slow stochastic, take that, turn it pink, and put it down here. It's the same line. And so the slow and fast stochastics share a line. Isn't that interesting? Okay. So that's the first part of this. Now I'm going to tell you about the platform that I'm using, and then when we come back, we will talk more about the difference between the slow and fast stochastics. So stick around. Today's video is brought to you by Prime XBT. I'm going to put a link in the description below this video so you can click on it and get these awesome charting tools and trading tools. Now, I've mentioned Prime XBT before. It is a multi-asset trading platform with over 50 different assets available for margin trading, including Bitcoin, gold, oil, S&P 500, Forex, and much more. With all trades, P&L is settled in Bitcoin. Now, I'd like to quickly show you one of the additional features that Prime XBT offers, which is the co-vesting module. Let's go there right now. This is a copy trading feature where users can browse through hundreds of trading strategies provided by other traders and automatically copy their trading activity. So if you don't want to or don't know how to trade, you can pick one or several traders and copy all of their traders. All historical performance is transparent so you can see how successful the trader was. Now, I recommend that you make sure you follow traders who have at least 1 month of a track record before you start copying. And you can see it right here in the active days column. You can see how many days they've been active on the copy trading or co-vesting platform. At the same time, experienced traders can earn success fees by allowing others to copy their trades. You would just go over here and create strategies. Very simple to start your strategy and allow others to copy your trades. And it takes only a few minutes. The more followers you will acquire, the more success fees you will get to make from profitable trading. Now, traders get 20% on average from all profits they generate for their followers. So it's a real win-win for both experienced and new traders. Check out this unique feature that is not found anywhere else. And as always, don't forget about the risks involved in trading. So again, you need to start by going to primexbt.com. Just click in the link in the description below this video to get started. So we're back and we're talking about the two different types of stochastic indicators that I like to use. And you have the slow stochastics on top, the fast stochastics on the bottom. And then, as I mentioned before, they both share a line. The orange line up here is the same as the pink line down here, if you'll notice, okay? Another thing that the slow and fast stochastics have in common is that they both have a faster moving line and a slower moving line. All right, I made them orange, the faster moving lines for both of these. I made the faster moving line orange in both of them, and that is called the K line, the faster moving one. And then in both of these, I made the slower moving line pink. All right, I made them pink in both ones, and so that is the D line, the slower moving line. All right, now the colors may be different in your platform, and so you want to check your settings. And I put everything on the standard settings here on Prime XBT. Okay, so you know what they have in common. What's the real difference? Well, it's in how fast they move and how often they give you signals, okay? I have a tendency to prefer the slower stochastics, all right, because it gives you fewer signals. It doesn't signal you as often with the crossover and cross-unders. However, if you look at the fast stochastics down here, like look over here, look at the top here, notice how many signals it's giving you. If you're using as a signal, whenever the orange line goes above the pink line, then you buy, and then if the orange line goes below the pink line, then you sell, and so on and so forth. Look how many in and out signals it's giving you here. A whole bunch in a row, okay? And so you're getting in, you're getting out, you're getting in, you're getting out. And this is a 1-minute candlestick chart. So you're getting in and out, 5 times in a row in a matter of just a few minutes, all right? And so I don't know if that's a great way to trade. It's not what I prefer. And then, look over here. Again, you got the orange line going above and below the pink line, meaning the faster K line going above and below the slower D line multiple times within a matter of a few minutes. And then again over here, I see it over here, you're in the trade, you're out. You're buying, selling, buying, selling, buying, selling, and constantly doing it. And I don't know if you like to trade that way, but I don't know if I like to get in and then get out so many times in a row. I found, for my personal taste, that I'm not saying that I never use it. Okay, sure, I'll use the fast stochastics for some purposes, but I think for most people, for most applications, this may be too jagged, may be giving you too many signals. Yes, you can adjust the settings, and you could try that out, but it's still going to be more jagged, probably, than the slow stochastic, which gives you, if you're using the crossover, like the K line crossing above the D line to get into a trade, and then when it crosses back below the D line to get out of a trade, it happens less frequently, and they may be more accurate signals, or at least more important signals to you. I cannot say whether these are accurate or not. I just think that if you want fewer signals but possibly better quality signals, and I would rather go with quality over quantity, in my opinion. I'd rather have fewer signals that are more powerful, to me at least, than get a whole bunch of signals and it's just constantly getting me in and out. And if you look at the candles, I mean, you got this in, out here, and the candles are barely moving. They're going sideways. And again, over here, in, out, and the candles are just going sideways. And so you're not making money probably during that whole period. It may be a waste of time, not something, I don't recommend wasting your energy and your time if you're just getting in and out constantly, all right? So that, to me, is the main difference between the slow and the fast stochastics. I hope this was helpful to you. And again, if you want to check out Prime XBT, you can click in the description below this video and get these powerful tools for yourself. Thank you so much for watching and listening. I will talk to you again soon.